Good morning, everyone. We'll start the session in another minute. People are joining. I think it is good to go. I'll start the session now. Good morning, everyone. Welcome to Pre-Bell with William O'Neill India. This is Rajasekhar Kongari, Equity Research Analyst at William O'Neill India. The date is June 14th, Tuesday. Let's start this podcast by discussing how the Nifty is placed and what levels we are looking at on the Nifty chart. Yesterday's action was very weak. Nifty gap down around more than nearly 300 points, taking global cues after US market which closed 3 to 4% lower on Friday night, and it also reached a recent correction low of 15,735 level yesterday intraday basis, and it made a low of 15,680 level, and hence we have changed the market status to downtrend because the recent correction low was breached on yesterday on intraday basis. So yesterday's low, that is 15,680, will be crucial from for the Nifty to hold for the next 3 sessions. If that level is held by the Nifty, will change the market status to rally attempt from there. However, if that level is breached and if the Nifty continues to fall, we remain in the downtrend phase and we do not add stocks to our model portfolio. And day one of rally attempt happens when Nifty closes on the positive side, or it closes in the 50% zone of trading range. So that is when a trading action is considered as a day one of attempted rally. We need such 3 days of attempted rallies. From there, we'll put the status into rally attempt. After rally attempt, we are looking for a follow-through day. That is Nifty advancing 1.5% or more on volume higher than the previous session. One thing I wanted to discuss was here we were in rally attempt. Nifty gave a follow-through day. It didn't give a follow-through day because the price change was more than 1.5% here, nearly 1.9% higher closing for the Nifty. However, the volume was on the lower side compared to the previous session. Here I was not able to show the volume bar, but if you have followed our mailers, you would have seen what I am talking about. Because of lower volume, though the action was strong, we have not considered it as a follow-through day, and we have not changed the market status to confirm that trend. And you can see what happened after there. Nifty had a full exhaustion gaps down and up. There was no clear trend in the market. It was highly volatile. Some days it was opening on the higher zone, some days it was opening on the lower zone. And yesterday, you can see it was a very, very, very bad opening and very, very bad closing for the Nifty. Satya has a question on where do you check. On MSA website, we do indicate Nifty here I am not able. I have only cropped out only Nifty's price action, not the volume action. But on MSA website, I can check. I'll try to show once for everyone. You can see here. This is a Nifty volume I'm talking about, and this is the action I was talking about. See, on May 20th, Friday, Nifty closed 2.9% higher. However, the volume was on the lower side compared to the May 19th session. Hence, we have not considered it as a follow-through day. I'll move forward. Let's talk about what are the key events happened overnight and how the US markets closed as well. US stocks continue to decline and S&P 500 has entered into a bear market that is closing more than 20% lower. Positive news from the India's market is that India's inflation for May cooled down to 7% from 8-month high which happened in April. This is a slightly positive sign because of higher inflation. Central banks across the globe are also increasing interest rates. So this is a good sign. The inflation comes down to around 6%, which is RBI's mandate, which is 4% plus or minus 2%, which is RBI is looking at targeting. So if the inflation cools down to 6%, then we won't be expecting another rate hikes in the coming meetings. So that is a good sign. And LIC shares have continued to fall because anchor investors lock-in period has ended. Yesterday it was down nearly 6%. Overall market was down 3%, 2%, but LIC has underperformed the general market for the last since listing. Has been happening. There has been a lot of wealth destruction for the investors. Embassy REIT, which has distributed nearly 6,000 crores to its unit holders since listing. This is also a positive sign for investors who are looking for alternative investments. REITs are very good investments in situations like this when equity markets are not performing well. REITs are good alternative investments. Another positive news is that asset quality across the NBFCs and HFCs has improved in March quarter. According to ICRA, this is also a positive sign. Asset quality plays an important role in the finances of banks and NBFCs. If asset quality is improved, then it is a very good sign for the investors, for the economy as well. And due to increasing interest rates by RBI, Bajaj Finance has taken a step to increase its deposit rates up to 20 BPS across its tenors. So deposit rates are going to increase, and also the loan rates will also increase. Airtel Extreme plan has had a increase in subscribers, and they have topped nearly 2 million paid users. They are going to focus on the regional content going forward to increase their base. And US markets again had a very bad day yesterday. That is Dow Jones nearly 3%, S&P 4%, Nasdaq 4.7%. Tech stocks have been taking a very big hit in the recent fall. Many people are comparing to recent fall to the tech bubble which happened in 2000. But we are not sure that was very huge bubble burst. We are yet to see a 20-25% decline only. Asian markets are also taking global cues, and they are also trading the negative zone. Kospi 1.6 and Nikkei 2.1% lower. Shanghai and Hang Seng are slightly flat to with a negative bias. That is also a good sign. Brent crude is trading nearly $122 per barrel, which is a bad sign for countries which are importing crude. Our finances will get badly because of rising Brent crude prices. RBI has estimated nearly $105 per barrel as average basket price. Anything above that will definitely hit our fiscal deficit and inflation and growth trajectory. All those will take a hit. Falling equities, bonds across the globe are rising. There is no ways about it because money is moving from riskier assets like equities to the safe haven assets like bonds, because bonds have backup of governments. So US 10-year bond is trading at 3.4%. This is a very risk-free rate. It is very high when for a country like US, and India's 10-year bond is also at 7.6%, which is also a high risk-free rate of 7.6. Very good for any investor. USD INR continue to depreciate, like currently rupee is depreciating sharply That is a bad sign for India's economy. 78.16 per dollar. SGX Nifty is also indicating nearly 110 points lower opening for the Nifty. Yesterday Nifty closed around 15,770 level. We might see 190 points lower opening for the Nifty if you take cues from SGX. And looking at the sectoral coverage, most of the sectors were in rally. Realty, pharma, bank, IT were rally prior to yesterday's session. After a bloodbath of nearly 3-4% decline, they have changed to under pressure. So there is no sectoral index which is in rally. That shows the broad-based selling which is happening in the market. Nifty is in correction phase that we have changed yesterday because of recent low breach. Yeah, thanks for joining, people. If you have any positions, please monitor them closely. We might see a gap down opening today as well. Have a nice trading session.